In this lesson, we're going to talk about trend reversal patterns, and these are patterns when a trend changes directions. So one classic pattern is a double top or a double bottom. And what a double bottom is when the price shoots down to a new low, establishes a level of support, and then retests that low. So as you can see here, we had a capitulation candle. And as mentioned before, this is where bag holders simply give up and they let go. And usually that signals the bottom or reversal. But oftentimes you need to have a retest and a shakeout. So as you can see here, we hit that same level of support. And the second test or shakeout on a double bottom is considered a springboard, right? Retests, it bounces, and then it breaks out into new highs. And now the same could be applied to double tops, right? On the larger trend, as we can see here, we established a new all-time high resistance. And on this larger trend, we hit that same resistance area, but instead of breaking out, we had a major correction. So if we do end up breaking out of all-time highs, generally the price needs to kind of establish itself at higher levels before breaking out. And so that's double tops and double bottoms. I'll show you another classic pattern called a head and shoulders pattern. So you could have a head and shoulders or an inverse head and shoulders. And I usually like to look at the daily candles for these patterns because it shows larger trends. So what a head and shoulders generally is that you have an initial run up and you create a new high. There's a correction. Then it has a second run up where it breaks out into new high, has another correction, and the second correction generally shows weakness in the trend. And then what ends up happening is you have a bounce or retracement on that big correction, but it makes a lower high. So this is kind of like the first major lower high on this run up here. So a bear trend is defined by a series of lower highs. So there are two ways that you could trade this pattern. You could either short aggressively up here, or you could wait for confirmation and short on the breakdown, or you could do both. So that's kind of like a head and shoulders pattern. Now, these don't have to be pretty. It's just the general concept. So the thing that really makes it a bearish pattern is the right shoulder, because as long as it keeps on making a higher high and higher low, then it's not a head and shoulders. So it's generally this right shoulder that confirms that the trend is about to roll over. And you could see that kind of thing happen multiple times over. And you can apply the same thing in reverse as well. So that's it for reversal patterns. See you in the next lesson. Cheers.